Hello, Ziegfried here from Cloud-Based Services Accountants. This morning I'm here in South Waikato in a reserve called Little Waipa on the banks of the Waikato River. So here's the Waikato River, lovely area here next to the Waikato River in South Waikato. Today I want to touch on trusts. I've recently attended a webinar presented by Chartered Accountants Australia and New Zealand, and they discussed the new rules and regulations pertaining to trusts. Obviously you get voluntary trusts, family trusts, and then obviously also charitable trusts, but the trust rules are basically across the board the same rules apply. What I would like to highlight today is mostly the duties of trustees. I also receive weekly updates from Wolters Kluwer or CCH, providing usually questions and answers, and that's very useful, and I'll also share some of that with you at the end of this video. So without further ado, let's get into it. What you'll see here is a couple of screenshots that I've taken from the webinar, and I've also put a link to the webinar in the description below. So if you're interested in more information, please follow that link. And all the material I use here obviously is from external sources, and I've placed links to that. So let's get going. Okay, as mentioned, I've joined the webinar of the Chartered Accountants Australia and New Zealand, and a link to the specific webinar is at the bottom of this video. So let's just carry on and have a look at the key duties of actually trustees. It is to know the terms of the trust, to act in accordance with the terms of the trust, to act honestly and in a good faith, to exercise your powers for a proper purpose, and further the purpose of the trust. So you can see the responsibilities related to being a trustee or appointed as a trustee of a trust. The maximum of duration of a trust has been extended to 125 years. That's interesting. And for charitable trusts, it's unlimited duration. So that's also amended. So let's quickly have a look at the core documents required to be kept by a trustee. So each trustee of a trust must keep, so far as reasonable, the following documents relating to the trust. So the trust deed and any other document that contains the terms of the trust. Very important to safeguard and keep a copy of the original trust deed. Any variations made to the trust or the deed of the trust, records of the trust property that identify the assets, liabilities, income and expenses of the trust, and that are appropriate to the value and complexity of the trust property. Any records of trustee decisions made during the trusteeship, any written contracts entered into during the trustee's trusteeship, any accounting records and financial statements prepared during the trustee's trusteeship. So very important that as well. Documents of appointment, removal and discharge of trustees, including any court orders appointing or removing trustees. Any letter or memorandum of wishes from the settlor. So that's also very important to have a letter or memorandum of wishes from the settlers. Any other documents necessary for the administration of the trust, and any documents referred to in paragraphs A to I that were kept by a former trustee during the person's trusteeship and passed on to the current trustee. So very important. If a trustee resigns, the documentation must be passed on to the next trustee or the following trustee. So the core documents, keeping documents where there is more than one trustee. So this is also important. If there is more than one trustee of a trust, each trustee must comply with the obligation in section 45, the previous section, by holding the documents specified in section 45 or copies of those documents And very important here, being satisfied that at least one of the trustees holds the other documents specified in section 45, and that those documents or copies of them will be made available to other trustees or trustees on request. So yeah, in that instance, only one trustee needs to hold it or is required to hold it. But obviously better if all trustees got copies of all documents. So documents must be kept for the duration of trusteeship. So as far as reasonable, the documents for the duration of the trusteeship. Again, a trustee, at the time of the trusteeship of a trustee ends, if the trust continues, the trustee must give at least one replacement trustee or continuing trustee the documents that the trustee holds at that time. So that's very important as far as the requirements, considering your duties as a trustee. Now, to change the trust deed, the following points need to be followed. So you have to follow your variation clause. That will be a clause in the trust. You have to draft a deed of variation, so that's a document you actually draft, and then witness and signatures in the correct way. And if it is an incorporated trust, fill out a CT3 for the company's office. And if it's registered as a charity, go to your online account and update your details. So important to follow those procedures. So the people that presented this webinar were Vicky Amundsen, and there's her contact details. I suggest if you've got any questions legal questions related to trust, make contact with Vicky. I'll also put her contact details at the bottom of this video. And then Andrew Phillips is specifically specializing in charities, and he's from Charity Services. And there's also a hotline and email and website. So very important. If you've got any questions, go directly to the people that know what it's about, rather than doing it incorrectly. Okay, yeah, so as you can see, the duties of trustees are, there's quite a big responsibility on the shoulders of trustees. It might be an honor to serve as a trustee, but you have to weigh up the duties in that respect as well. So let's quickly go over onto questions and answers that we receive on a weekly basis from Wolters Kluwer, as previously mentioned. So I just want to quickly run through this, and this is very interesting and very relevant at this stage with a bright line test in property purchases, and where you purchase property as a on behalf of a nominee, which can be a trust. So let's quickly go through this. So the question is, an individual entered an agreement to purchase land and new apartment off the plans on 26 March 2018 on behalf of his family trust. There we go. The sale and purchase agreement contained the standard and or nominee clause, and he subsequently advised the vendor that the trustees of his family trust would be settling the agreement. Now, settlement was to occur once title to the land issued and construction of apartment was completed. The trustees settled the purchase in February 2020. In April 2021, the trustees entered into a contract to sell the apartment. So now you can see on 26 March, the individual entered into the actual agreement on behalf of his family trust as nominee, but settlement, the trustees settled the purchase only in February 2020, and in April 2021, the trustees entered into a contract to sell the apartment. So good. So February received it, it was settled, and then in April 2021, that's about a year later, year and a half later, no, well, a year and 2 months later, 3 months later, the trustees entered into a contract to sell the apartment again. So, question, does the April 2021 sale fall outside the bright line rules? given sale and purchase agreement is dated 26 March 2018, or is the relevant date February 2020 when the title was registered in the name of trustees? So very important here. So this is the answer. So when residential land is purchased off the plans, subject to title being issued, for the purpose of the bright line test, the start date of the bright line period is the date of entry into a contract to purchase a property. So yeah, this is different to standard purchases where registration of title to the land in the name of a purchaser is the start date of the bright line test period. That's a very important to understand that and to take note of that. Therefore, if the individual had purchased the property in his own name, the bright line period would have started on 26 March 2018 when the sale and purchase agreement was signed. This would mean the property was subject to the 2-year bright line period and not the 5-year or 10-year period. The sale of the property in April 2021 would have been outside the bright line period. Good, but that's now as far as if it was purchased by the individual. So, however, in this case, the purchase was settled by the trustees of the individual's family trust. So, Inland Revenue distinguishes between two types of nomination. The first is where a named purchaser is acting on someone else's behalf, and that person is subsequently nominated as the purchaser. In this situation, Section YB21 will apply. That's now the Income Tax Act. Under Section YB21, because the named purchaser was acting on the other person's behalf, the other person is treated as having done what the named purchaser did and as holding the resulting rights. The purchaser acting on the other's behalf is ignored. The nominee will acquire an interest in the land on the date the named purchaser acquired the interest. So it backdated to that initial date, that date 26 March 2018. So the second potential interpretation is where a person enters into a sale and purchase agreement, and that person and or nominee is named as the purchaser. Before settlement, the purchaser may then choose to nominate someone else, a nominee, to complete the purchase. In this situation, the nominee does not acquire an interest in the land until the date they are nominated as the purchaser. In this case, it appears that the first type of nomination applies because the individual entered the sale and purchase agreement on behalf of the trustee of the trust. Therefore, the start of the bright line period for the trustees is the date the individual entered agreement to acquire the apartment following completion of the subdivision and its construction. Accordingly, the sale of apartment is outside the bright line period. If it had been the second type nomination, the trustees are not treated as having entered into the agreement when the individual did. The bright line period for the trustee would have commenced when title to the property was registered in their names, and that's February 2020, and the sale would have been within the bright line period. So very important to look at those two potential different ways by the way that the contract was entered into, and the nominees were specified at that initial stage. So just take note of that. If you've got any further questions, just get in touch with me, and we can perhaps explain it a bit better than just reading this from this question and answers. Okay, so that was it. I hope you've enjoyed this video. If you like this, please subscribe to our link or click the like button, the thumbs up button, and yeah, speak to you next time. Cheers.